Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to look at ratios. We're going to look at a bunch of ratios, see how they're moving against each other. So it's an asset versus an asset. See what the charts are looking like and seeing how low they are. Low being if a ratio is very low compared to history, it is cheap, the denominator of that asset. Or the numerator, if it's very high, means that the numerator is cheap. And we'll take a look to see how these assets are performing against each other, what's cheap, how they're performing, and what I think are good potential asset classes to be looking at. And obviously, I'm going to give you my financial opinions as I go. And if you guys need help with any individual companies, the first is to identify where the sectors are at. Second is how to play it. You can find the value out in the markets, which is, I would say, a big battle. That's half the battle. The other half is how do you play this thing with very good leverage? How do you play it with good risk reward? What companies are better than others? Ones that cash flow, ones that don't cash flow now, but will be cash flowing in a couple of years, given the market turning around. That's where the big money's made. It's finding the sector and then knowing how to play that sector and then riding it for the entire duration of the bull market. All right, guys, let's dive in. Let's see what I've got. I'm going to start with the platinum to gold ratio. You guys all know I'm a platinum bull. We've been in a peaking period back here in the 2000 to 2008 timeframe. So 2000 was the bull market all the way up to about 2001, and then it turned over. That was the beginning of the bull market of last, we'll call it the mini boom. We went to a large, from 2008 all the way down to the bottom here, was a disinflationary period, a real estate cycle that was in a recovery mode. Low inflation, low interest rate environment, no reason for money to rotate. Now, some things have changed. Higher interest rates, higher inflation. We have a break to the upside of this pattern saying, look, something's different. And platinum's starting to outperform gold, and we're starting to see it put some work in here the past couple of months. This looks excellent for a move higher, where platinum could outperform gold. We're still at very low levels. We're at 0.58, and these peaked at around 2.25. So what that means is that when platinum and gold, when they either both go up together or one goes sideways and one goes up, it means that platinum will outperform gold at a ratio of about 4 times. So it'll go up 4 times as fast over a period of time against gold if it were to repeat last bull market. So platinum's looking very good, it's very leveraged, and it's very cheap at this time. Platinum against palladium, also incredibly cheap. We're at 0.52. Last bull market, we reached a peak of 5.56. That has to go up 11 times in value against palladium. I don't care if palladium falls and platinum goes up. If platinum goes sideways or palladium goes sideways and platinum goes all the way up, or a combination of any of those. I want platinum to outperform palladium and get to a ratio that's up there so I can buy more of something else. And then we've got platinum to silver. It has broken this kind of wedge pattern to the upside. Surprisingly, platinum is cheaper than silver on a historical basis. It's actually quite a bit cheaper. And if you had moved into silver at a 1 to 50 ratio, you would have looked like a genius and ride it all the way back down and swapped it either here to a different metal or here. That would have been a ratio of 1 to 40. That's a really good ratio down there. And we got below it 1 to 33, 34 down there too. But it looks like it's breaking to the upside. We'll see, hopefully, that platinum outperforms silver and that even silver does well. The gold to silver ratio, I think, is the one I have up next, which it is, gold to silver ratio. We've been in this long-term channel. You kind of look long-term. The low point's about 50-ish, high point's about 100. We went to a very cheap ratio back in 2020 where it peaked around 123. I don't think you could have bought any physical for that actual amount because the premiums went kind of ballistic at that time. But look what we've got. We have a break lower. That's the red line here that we broke out. We've come on up and did a retest of the breakout, which is the breakout here. We retested back up here, and we're starting to fall, and we've broken the trend line to the downside. Ultra bullish for silver, guys. Silver and platinum are looking really good right now. Looking at palladium to silver, when this ratio goes down, silver's outperforming. We squeezed up into the corner against this resistance line and broke to the downside. That means that silver will most likely outperform palladium. We'll probably go back to this lower level at about 80. Then I think it's going to spill the beans way lower after we break out of this channel, probably all the way down to maybe even 15 again. Probably below 20 is my guess. Silver will outperform. It'll perform kind of a little bit later than where we are today. And I think we're going to see a big outperformance for silver. Dow Jones Industrial Average against gold. Big long-term picture, you can see that we're in this gigantic megaphone pattern. I do think that this is going to go all the way back down to the bottom here at some point of a ratio of 1 Dow Jones to 2 gold. Somewhere around that ratio. It's going to take some time, though. Give it some time. And it may go up first before it goes down if we have a bull trap or something like that. Gold to oil ratio, one of my favorite ratios because I like energy so much. Anomaly in history. The money-making opportunity of a lifetime happened in 2020. Even at a ratio up here is an opportunity of a lifetime. We've come all the way down and compressed below the lower support level, which is 21, which is slightly cheap. Average is about 15. We're chopping sideways. We came up into this corner and we've broken to the downside. So I think that we are going to see further compression or oil outperform gold in the short term where we compress downward. We've broken that down. So, you know, when looking at these past couple of charts, what I think is going to happen is platinum's going to do well, silver's going to do well, and oil looks poised to do very well and outperform. So those are the commodities so far. Copper to gold ratio, it is tracking higher. I don't really have too much money playing on this, but we've been in this downward channel, kind of just moving sideways there on a slight downward move. I do think this will break and move to the upside eventually. And then looking at the future uranium prices, this is pretty crazy. We have a breakout of uranium, and then usually it does a retest, and I think that retest, this is against silver, if you guys want to know, is probably going to be done here shortly. I think we're going to get a turnaround somewhere at any second, meaning that uranium will most likely start to outperform a lot of different commodities. So this is uranium futures pricing to silver, uranium against the S&P 500. Let me move this over a little bit. And I think eventually uranium, it breaks out, it does a retest move. We all know this on the channel. Remember the retests. Remember what I do with retests, guys. What do? You buy the pullback. You buy it when it comes back. So it's happening right in front of our eyes. And that's when I take action. That's when I take action and load up. We've got 2 resistance lines here. We got a top one. Yeah, I kind of drew it a little crooked. Let me tighten it up a little bit. Somewhere on the lines of that. We have another support resistance line coming through here. We broke out of that one. We've got a little overhead resistance getting caught in it. And then I think we're going to break free, meaning that uranium's going to outperform gold. And we've got a long way to go higher. We've got uranium against crude oil. You think that crude oil is going to be the beast here. It might be uranium. We've got a downtrend line. We've broken that to the upside, did a little bit of a retest. Still moving sideways. I'm doing a little retest here. And guys, I think uranium could do some crazy stuff coming up here. It looks really good. This is uranium versus copper. Remember, we hit these little resistance areas and we usually, bounce back. We hit this resistance area, bounce back, hit the resistance area, bounce back. Now, I think what's going to happen is, what are we going to do here? Are we going to do a little loop and then just roll it? Or are we going to loop out, come back and do a test like that? The path is unknown, but I can tell you this, uranium looks really good. It is very low against copper and all these other commodities. That's where I would be looking. And then Baltic dry index to gold, still very cheap. This is in the depths of cheap land. I do think this will turn around, and I do think that we're going to go all the way to the top of this, which means that eventually the Baltic dry index, when we try to implement all of these solutions, which are very mineral intensive, and we're going to be mining all these minerals and shipping them all around the world, I think that shipping could be a very good opportunity. But we're in a brutal bear market ever since 2008, and we have been depressed for a very long time. Whenever you go to levels this low, it is hurting that market. We overbuilt this market too bad, and we're going to go to the opposite end, and we're going to probably see shortages that are far too great at some point in the future. Lower the lows or higher the highs, that creates larger imbalances in the markets. That's what the ratio means. I'm also going to play with some ratios at the bottom here. This is URNM versus XLE. And one thing that's real interesting here is I'm noticing that uranium's throwing some really good chart patterns against other commodities. We've got a nice good support level here. We're bouncing on that support level. We have a declining wedge. We've broken to the upside, and we're kind of doing a full retest. If this thing holds, I think we could see some crazy stuff out of URNM, especially if XLE is going up. And remember, we could see a slingshot where it goes down and then slingshots higher, meaning that XLE will lead the move and URNM will come back and do some crazy stuff. URNM versus natural gas. Natural gas has been on a tear the past couple of days. But when looking at this, we are still very cheap and very low with URNM in relationship to natural gas. So I think that this could go way higher and come all the way back up to a level where uranium outperforms natural gas. And why am I using natural gas? Natural gas is a competitive fuel. And I know I've got URNM in relationship to uranium. We've got URNM versus XOP. We've got that same setup as XLE. We've got a support level that we've bounced off multiple times, a downtrend line break, and basically a consolidation period that happens. Watch out for URNM. We are cheap right now here, guys. I think people are forgetting about it, and the market sentiment for uranium's been kind of low. I'm getting bullish. URNM versus platinum, also quite low. And we're putting in these nice little hammer candlestick. Last time we put a hammer candlestick, it really shot higher. I think uranium's ready to flex its muscles at any point here, guys. We've got uranium about to break out against NDQ. I think that's the NASDAQ. That's looking great for a move higher. URNM is also on a support area against the commodity sector in general. We kind of went down, had a nice little falling wedge. We've broken out of the falling wedge. Now we're going to start gaining our feet, and I think we're going to see a potential move, hopefully. URNM against OIH, energy service companies. We are back at this support level. And that support level could do some crazy stuff for URNM. I think OIH is an incredibly good sector. Maybe it pulls back even more down here and then reverses. Tough to say, but it's at support. URNM versus REMX, this has been a real battle, just going sideways the entire time. Not much of trends or anything there. And URNM has been outpacing copper for a little bit, where I think it will continue to outpace. But, I mean, maybe we get a little bit lower where copper gets a nice little run here. But I think uranium looks really good overall, especially the futures pricing. And I think we could see a big move. So looking at all these ratios, to sum it up, on the sector sides, I like platinum, I like silver, I like oil, and uranium's looking like it could outperform a lot of stuff. Does it need a little bit more time? Maybe. Again, I don't know the path, but I can tell you that it looks positive, and we're rounding out all these bottoms with the uranium futures price. Looking at URNM, I also think that it could outperform a lot of these things, and we're right at support levels. That's usually where I start looking for opportunities. If you guys need help finding what opportunities to play this with, definitely sign up for the finding-value.com Platinum membership. I go over it all the time. I think I've got exceptionally good picks for leverage to the moves of these underlying stocks. Leverage means that they are more volatile. You're going to have to live through more volatility, but it will give you a lot larger returns on the end. I also have ones that aren't as volatile. If you're interested, come to the question and answer session. The next one is at 7 a.m. Saturday, Mountain Standard Time. That is 11:12 is Saturday. So we'll see the Platinum question and answer, the Platinum members there. Ask away. I'm there to help you guys with whatever I can. I share what I'm doing. Obviously, I can't give advice or anything like that. But yeah, that's what I've got for today. If you like the content, subscribe to the channel, give me a thumbs up, and we'll catch you next time. This is Finding Value.